go ahead and request to speak. That might help a little bit.
Hey, lady. What's going on?
Hi, my dear. I'm trying to pull up all of our speakers. I hope everybody's doing well.
I do too. I'm not going to stay up here because obviously you guys have a lot of people. I just wanted to say thank you guys for hosting a great GME space. I think this is definitely well needed for everybody in the community. So I look forward to listening, sitting back, listening, and everything. So, and I know everyone's going to appreciate this being recorded. So I do also want to thank you for letting BullHouse record it. Obviously, Lady is hosting this and being her big bad self and all, but I think it's pretty badass.
Well, thank you for doing that for us. I think it'll be helpful and for prosperity.
Yes. All right, I'll hop back down. Kill it, guys. I love it.
Okay, thank you. Let's see, Monkey Business. I sent you an invite to speak, and I think I sent it to. No, Griffin got it already. Okay. 1 second. Kramer, are you there? Rat.
Yeah, I'm there. I was just busy grabbing something.
Okay, hold on 1 second.
I'm trying to see who else we need to invite up. That's all.
Okay, let's see here. 1 sec, guys.
Who are we missing?
So it looks like, yeah, I'm trying to pull up Monkey Business.
I invited him. Did he not get it?
I don't know. Conway, are you there? Yeah?
Yeah, I'm here. I might step away because I haven't eaten, so I might go cook something while I listen, but I'm here.
Okay.
That's all right.
Good. Just pulling up some people. Let's see. I have Short Destroyer. I don't know if he can speak. Did say something came up, so. Oh.
Monkey's having trouble hearing stuff, apparently.
Face as if only you actually ran smoothly. Monkey Business, are you there? No.
That's a no.
Okay, so we're just going to listen to you, CokeRatCramer.
Oh, God, I don't even know what. All right. Yeah, so welcome. I thought that... I can't remember when was the last time we actually had a Twitter space, to be fair. But I just thought the other day that we should have had a GME space. We haven't had one for quite a while. The space will be purely just to do with GameStop. Won't be any other stocks talked about, really. There might be a mention of Loopring just because of what's been going on with recent marketplace action and stuff like that, but nothing too in depth on anything other than GameStop. I just wanted to sort of like discuss what with the speakers that we've got today, some sort of like their thoughts on recent DD or any speculation that they've got with going on with other thoughts that they've had, really. I just thought the last one that we had was quite interesting, really. So yeah, I want to thank you all for coming. I just need to go grab a drink. I'm fucking thirsty. So if you can just bear with me 1 second.
So does anybody want to start us off with anything? Does anybody have any like particular interesting things that have kind of caught their eye that want to kind of start us off? Or do we just want to go ahead and pull up some people who are requesting to speak and we can just kind of go from there and have a natural conversation?
I mean, I could comment just a little bit on where we are at right now. The fact that it's November and the stock is still kind of hanging out above, around 200 or above 200 kind of speaks to the strength of the movement in this specific stock. And then last week when we had Ryan tweet out he wasn't sure what he should do, hodl or hold, it just seems like based on the evidence we had at the shareholder meeting and just the continued interest in this stock, that we do own this float. And if we don't sell, shares are going to definitely continue to float higher because, we have time, the shorts don't. And I can't remember who tweeted out, but November 15th is an important date for hedge funds. They get notified about the redemptions. So there is, you have to be kind of nutty.
Productive citizen, do you mind just kind of going a little bit deeper into what that actually means?
Sure.
Yeah, because I have no idea what that means.
Sure. Hedge funds put up these things called gates so that you cannot just withdraw your money at any time. And they usually, for end of the year stuff, you have to give them 45 days notice so they have time to raise money. And if you're a fund manager and you're short GameStop right now, you're pretty much certain that clients are going to pull their money before the end of the year. So I think that's basically as simply as I can put it. Like you have a certain amount of time before you can withdraw money from a hedge fund, and you let them know, and then they kind of get to raise the funds. So I think like if you're an investor in a hedge fund and you know that they've been short GameStop this whole year, you probably want out if they haven't covered by now because they're getting killed. I've seen several funds that are either down a ton this year or that are trying to cover their butts by raising more funds. I just think that's definitely a potential catalyst. It might not necessarily happen tomorrow. That's when the notices go out, so this is kind of a tailwind going into the end of the year, because if by some miracle a short hedge fund still has clients at the end of 2021, they don't want to have a GameStop short on their positions list, because then when people consider next year, you're going to be like, nah. But I just kind of want to go back to the other side of this, that we got that SEC report since we last had a call like this. And I think it's important to note that they talked about the short interest decrease from over 100% down into the teens or whatever. What they did not explain, and what no one has explained, is where the additional shares came from and the volume. Like they have not explained the volume in late January. It does not add up. And we know that there's arguments about options trading and how that's covering things up, market makers covering things up. But kind of like my biggest takeaway from that SEC report was that Citadel lied about the shares, and dark pools were most likely used to manipulate the shares down when the buy button was off. I feel like that's something that's going on here that we should not forget. Like that is a huge thing. The SEC took months and they did not explain how the short interest dropped. I think that's super important for us to note. And then there's anecdotal stories about TD Ameritrade or Fidelity having issues transferring shares. It's just this story's not over. I mean, the shares would not be up here. And then that's the technical side of the squeeze, right? There's actually a fundamental story here now, and I'll let other folks talk about that. But I think from a MOAS perspective, like there's still a lot of questions out there, and I'm glad everyone's still doing digging out there trying to explain this. But it's to me that was one of the most interesting things out of the SEC report was not the information provided, but that they didn't even explain how the covering occurred.
No, I think when that report came out, and I think I tweeted out that picture of the graph where it showed that basically they hadn't covered, but they weren't able to describe or tell us how you'd gone from, because I think in February the percentage was over 221% short, and then all of a sudden within the space of God knows how long, with very little volume, you've gone down. We were down to like 17% or something.
Yeah.
It never made any sense to me. That
Yeah,
didn't.
like if you go through the SEC's own presentation, you look at the volume and the short covering volume, it simply doesn't add up. And my mind instantly goes to, well, who's plugged into the NASDAQ in those dark pools? Because
Yeah,
they're probably fabricating shares to cover that those months.
I think the fact it came from the SEC itself was quite a big surprise to me personally. I was like, I didn't expect that.
Mm-hmm.
Yeah, I mean, a lot of people that ask me if I'm still in the stock or whatnot, or it's over. Look at what happened in January, and then you get these sort of confirmations that the reason why I'm still in it's still holding up truth. You know what I mean? They never covered back in January, and that report alone proved it. I didn't know anything about that hedge fund client thing on the 15th. That's quite a good bit of information.
Yeah, and that's quarterly, CokeRat. So it's like, each hedge fund has their own different rules, but usually it's 45 days before the end of the quarter is historically when they do that. So that would be November 15th. But then that's also like, I don't know, I suck at math, like February something, or like there's going to be these moments in time where I think the longer GME stays up here, the more insane you have to be to short this thing.
I mean, we've been bumbling around the 180 to 250 range for like quite a bit now, haven't we? And we always seem to be setting these higher lows. They've been pumping out some good products and deals, and my Twitter feed mostly is nothing but people buying off GameStop, so they're not going anywhere anytime soon. You've got the speculation with the NFT marketplace, whatever they're doing in the NFT space, whether we've all had speculations about dividends, all of this, all of that, it doesn't matter, but that they've got that going on. We've got, when is Black Friday?
It's 2 weeks. It's a week from this Friday.
So you just know that is going to be big for GameStop. I think.
Yeah.
It might not get reported in this. It won't get reported in this quarter, will it? That'll be the next one.
The December quarter, it will not report that. That'll be the one that their first report of 2022 will disclose their holiday sales.
Yeah, because I can just sense that one will be quite a big one, or quite a good report, that one. And like you say, all these clients debating whether or not to stay in or pull their money out. If their hedge fund is still short, but these clients are seeing these reports coming from GameStop, that's just going to put nothing but a little bit more fear in whether or not they stay in.
I kind of wanted to comment on the NFT marketplace rumors, because I run a website. We cover gaming news over there at Shack News, and in the last week or two, we've heard several video game companies talk about entering the NFT space. namely EA, Electronic Arts, and Square Enix, the people who make Final Fantasy and all that. EA has that Ultimate Team feature in Madden and FIFA. They're talking about how they can potentially make like collectible cards based on the video games. What I think's going on here, and obviously this is just speculation, but based on a lot of what we've seen with the GME NFT marketplace rumors, also their own website, also their hiring. I think that GameStop is trying to position themselves as the video game NFT store. And these other companies are going to list their NFTs on the marketplace from GameStop because they don't want to have to deal with the logistics. They don't want to take the risk of building the infrastructure to sell these things. They just want to be able to make, and this is purely hypothetical, like a Charizard collectible NFT, right, by the Pokemon Company and list it on the GameStop NFT marketplace. I think that's where this is headed. And I think that's that Six Sigma event that could really catalyze this to a major MOAS situation, because we've seen how crypto, when a company actually does something in the crypto space well, crypto investors do invest in that stock, and also just regular investors do too. So I do think that is like, that's like an edge case bull scenario out there that I don't think people are really considering. Because if a monkey or a bored ape is going for $500 million, or whatever CryptoPunk is selling for $500 million, imagine what an actual video game NFT would go for in this market right now, in this hot Ethereum market, and this, everything. But yeah, I think that's what's going on here, is that GameStop may be positioning themselves as the marketplace for video game NFTs, and that's worth a lot of money.
Yeah, because you got to remember the video game industry is, I think it's huge. It's like 300. Is it 300 billion or something?
It's massive. It's larger than movies, television, and music now, and it's growing faster than any of those industries.
Yeah,
I would, it's, the data is hard to report right now because there's hardware data, CokeRat, and then there's software data. And I think that the only risk that we have as GameStop shareholders is that Sony, Microsoft, and Nintendo are all struggling to make hardware right now, and that could hurt the top line at GameStop. But outside of that, like what they're doing with their apparel move, or the monitors, all that stuff that they're doing that they can sell through the website, all that's great, all that's a value add, all that's something that they weren't doing a year ago.
yeah.
So I think that's another reason to be bullish in the stock. But yeah, like, to me, this is definitely a sales story. Like, everyone likes to focus on, oh, they're not making money yet. Like, they're trying to take a piece of the pie here from larger companies like Amazon. And I think that between their online push that they've done, the fulfillment centers that they've bought, the new customer service center that they've set up, I think to set up for the future. And just going back to like what Ryan said this week is super bullish, especially in light of other CEOs at other companies that are dumping their stock this week.
I think that's the first time as well that he's actually directed a tweet that we haven't spent a weekend trying to decipher. You knew it was about GameStop, didn't you, from the second that he tweeted it?
And honestly, you kind of know it's about crypto too, because HODL is not something that that definitely was born out of the Bitcoin market, right?
Yeah, it was on a Bitcoin forum back in 2013. I think someone put on a forum post where they said reasons why I'm hodling.
Yeah.
Turns out it was just a typo, which is what I think I said in one of my tweets. I said, or did I reply to him? I said something about I'll hold your stock or something, but I'll also do something with crypto if you release it, because hodl, it does come from crypto.
Yeah. So I think like he's not being that cagey with us right now. It's not just a picture of him as a chair or him in a GameStop. Like, yeah, sorry, go ahead.
Sorry, I did say that it was going to be a GME space and speculation and whatnot, but I was just thinking then that the reason why he's openly talking like that is because you know that there's the speculation between GameStop and Loopring and this layer 2 and this marketplace and whatnot. Loopring, they have said that they are releasing news Q4 this year, so maybe we're both companies that are sort of coming to the point where they're wanting to speak about it, if that makes sense. So as soon as Loopring mentions something, if it does include GameStop, then that obviously frees Ryan to speak up and do all of that sort of stuff, doesn't it?
Yeah, and I hope they launch it soon. As a shareholder, I whatever they're working on, it seems they're hiring on the marketing side of it and also on the tech side of it still. So maybe they're still working on it. But yeah, I do think that it's like an edge case for the stock now. It's really fascinating. Like, we as shareholders, we saved GameStop, and now we're hoping to transform GameStop. And I think that's what makes it unique in this stock market, is that there's other companies that have been saved because of generous shareholders buying in January and all year, but they're not really changing their business models. GameStop is drastically changing. And I don't know, 5 years from now, it's probably not going to look, the income statement's not going to look the same as it does right now. I think that's really fascinating. I think it's a credit to everyone here, and it speaks to the power of the individual stock investor.
Yeah, I don't think, like you said about the chip shortages as well, I don't think we've actually seen vast buying of games consoles, really, have we?
No, I can tell you Sony would be moving PS5s right now if they could.
If there was no chip shortages, the amount of sales through GameStop would have been way more than what they are or have been in the past few earnings reports, at least. But considering all of that, we've done quite well on the past earning reports, if that,
Mm-hmm. Oh no, I think revenue is holding up extremely well. And then you also have come holidays, you're not necessarily just buying a console there. GameStop has done a really good job of like selling and shifting their store shelves towards physical collectibles, nerd gear. When you go in there now, there's racks of T-shirts, for geeks. Like that ThinkGeek acquisition, and that kind of when they internalized it, there's a lot of ThinkGeek when you walk into a GameStop now, and I think that you look at the hoodies. I don't know if you guys bought your hoodies or your sweatpants from GameStop, but like they're just doing a lot in new product categories. I think that'll be the difference year over year. Maybe not this quarter, but next. But yeah, and this is something like every single company that makes consumer electronics warned about chips on their recent quarter. So I think it's something to be mindful of. But I don't think just because there's a chip shortage does not mean there's not demand. It doesn't mean there's no demand for video game products. There's actually record levels of demand for video game products right now.
Very big demand.
I'm going to cut in because I've been trying to say... All right, sorry, Lady. You want to say something?
No, I was just going to say, actually, real quick before you jump in, Conway, I saw that you had your hand up, and also Train Ticket. You guys, feel free to jump in whenever you want. Also, those who are in the audience who want to ask a question, feel free to request. I'm just kind of letting everything kind of just take its natural course, but don't think that we don't see you requesting, okay? Sorry, go ahead, Conway.
I just wanted to say, well, I have a lot to talk about, but touching on some of the things that we've been talking about, I'm going to say that we're focusing on the wrong things. Like, we've been talking about the same stuff for months now, and we're really focusing on the wrong things. Look, we know by now that no matter how much retail pressure there is buying the stock, it doesn't really seem to move the stock price up. But here's how you actually move the stock price up. Okay, this comes from an interview with Jeff Bezos. I forget who he was talking to, but if you go on YouTube and look it up, what is the search term? Jeff Bezos free cash flow. Okay, in this interview, he talks about a couple of things. Basically, he says, how do you actually get a stock price to move up? Well, the two main things, if you want to reverse engineer it, the two main things is return on capital investment and free cash flow. Return on capital investment, we can see it in GameStop, where they've been devoting money to developing this new product line of merchandise, of apparel, right? Personally, when they tweeted out that they released new merchandise, I bought all of it. Okay, they sold a beanie, I bought that. They bought 2 different kinds of socks, I bought that. The joggers, I bought that. The hoodies, I bought all of them. The t-shirts, I bought all of them. And that's the important thing, is that if they can prove to investors, to professional Wall Street investors, that they are getting returns on the money that they're putting into new business ventures, that is bullish on its face. And if you're spending all your money buying the stock and not actually supporting the company that you want to go up, you're focusing on the wrong thing. The second thing is free cash flow, right? Now, that's a little bit of a complicated topic, but it just comes down to money and how much money that they're making after all their expenses are paid, right? That's the easy way to think about it. And so a good way to help them with free cash flow is buying things where they make high margins on. Now, if you're into Funko Pops, that's one of the highest margin things, right? I'm not, so I don't really buy any. I bought a couple of them that I thought were particularly cute, but I'm not like a huge Funko collector. Their Atrix line of accessories, right? Keyboards, mice, headphones, and stuff like that. That is another piece of their capital investment that they need to make a return on. So, and they're good products according to King Diamond Hands, right? I haven't personally tried it. I've got like a cheap, keyboard made of the finest Chinesium that I'm looking to replace. Mice, I bought 3 mice from GameStop. I only have 1 computer, but the mice look good, so I bought those. And if they can increase their free cash flow, that is another huge driver for increasing the stock price. This will be when institutions start stepping in, okay? Another thing is that the NFT marketplace. If you go on cryptoslam.io right now, you can see a list of all of the NFTs being sold, mostly through OpenSea, right? But also through, Super Rare, Rarible, whatever. And they tally up the dollar amount of how much volume there is in this NFT space. And right now, all of these NFTs are being traded on level 1. Okay? Huge gas fees. Okay? Both to transact and to mint. And Loopring changes that, right? At this point, we're like 99.99% sure that GameStop is the third party developing the marketplace with Loopring, right? It hasn't been officially announced yet, so we can't say 100%, but we're like very nearly convinced. If you go on cryptoslam.io and you look at all of that money flowing, right? Know this, OpenSea charges 2.5% per transaction. That's a lot of money. Okay. And the other marketplaces that also do NFTs, they charge about the same. Some a little bit higher. I don't know if anybody charges a little bit lower. It doesn't matter. The 2.5% on its face is a lot of money. Okay. And that is another return on capital investment if we can get this NFT marketplace off the ground, right? Because not only is it going to be cheaper to mint NFTs, meaning you're burning less money for no reason other than to just create an NFT, it'll be cheaper to transact, and every transaction, GameStop theoretically is making some sort of percentage on that, right? And Loopring is the only organization developing this sort of technology on layer 2 with ZK rollups right now. This is game-changing stuff, okay? So if you're an artist, if you're a photographer, if you're, whatever, and you have artwork or anything, music, potentially look to start publishing on this NFT marketplace when it does finally launch. Okay, be ready. Start getting your stuff ready now, because when this NFT marketplace launches, it's go time, baby. It's got to be successful, and we're a part of that. The thing you have to remember as a shareholder, right? You're a partial owner of the company, so it is incumbent on you, partially, to ensure that the company is successful. That is not to say that you are supposed to manipulate the stock and to manipulate people into buying the stock, okay? That is not the case, all right? But if you can get people to really consider shopping at GameStop instead of Amazon, okay? Because legitimately, GameStop is legitimately competing in that space, in the consumer electronics space, right? That's something that helps. If you can legitimately help people see that signing up for a PowerUp Rewards membership is worth it. And I do think it's worth it. I've looked at a bunch of memberships. I think the Power Up Rewards membership is the best membership plan on the internet, okay? Because this plan gives you money back. It gives you more money back than it costs. I don't see another company doing that, okay? So start thinking about things in these terms, right? If you need a TV, instead of going to Best Buy or Amazon or Costco to buy something like that, look at GameStop, because they're carrying extremely high-end TVs now, and they do price matching. Like, these are the things that I think, as partial owners of a company, we should be looking at. The stock price, it's irrelevant. If you're in this for the long haul, if you're in this for, as a true investor, okay, it doesn't matter what the stock does day to day. Now, yes, we're used to watching it all the time, but again, you're focusing on the wrong things. That will come, okay? This company is not going out of business because of everything that's happened in the past year and how much money they have right now, okay? Same thing with the debt that they just took out. Some people think that debt is a bad thing. Debt is not always a bad thing. Debt can be a good thing. And in the eyes of Wall Street, if you have a low interest rate loan that doesn't handcuff you, okay, that is an asset, not a liability. The old debts that GameStop used to have came with a lot of handcuffs, right? They couldn't do mergers and acquisitions. They couldn't do a stock split. They couldn't do a dividend. They couldn't do a lot of things. And they paid off that debt. They got rid of it. And now they're in debt again, but only by what, 500 million, right? They have more than 3 times that amount of cash just sitting in the bank, not doing anything. From the perspective of Wall Street, having cash is not a good thing because it's not working for you. Having debt gives you more operational leverage, and you can put that money to work. And so having, like, it's kind of a weird concept, but having debt, as long as it's low interest rate with very few handcuffs or no handcuffs, that is a good thing in the eyes of Wall Street. Okay, I'm burning my lunch. I will be back.
Thank you. No, some really good points there.
Would you guys mind if I said a quick word or two?
Yeah,
No,
for
you
it.
go ahead.
Thank you. I agree with a lot of what Conway just said, and I suppose looking at I don't want to spend too long on the NFT side of things, but I do see a lot of scope for GameStop, for other computer game development companies moving towards GameStop as the sort of NFT marketplace, in the way that companies like Epic Games have been struggling with Apple's charges in the App Store, and I'm sure a couple of other companies are looking at GameStop and looking at Epic's battle with Apple, and considering how much cheaper it's going to be to let GameStop do the building for them, and provide a sort of a viable, feasible alternative to Apple. With regard to the shareholders and the moving of the share price, I think a balance needs to be struck. I think it ought to be so much on shareholders to buy more in-store stock, because that's what the general public is going to do. So I think it's great to convince those around us to consider GameStop and to continue to be ambassadors for GameStop. But I would be cautious about focusing all of one's expenses into in-store purchases from GameStop, as opposed to investing further in the stock. I mean, obviously we all have to look after our own accumulation too, depending on how many shares we're all holding. We want to make sure our future is secure. And also we want to really fuck these hedges. So the more we buy, the better it is. And just one final point on the price. I just see more and more, when I look at the full chart for the year, I just see smaller and smaller sort of chart and candle formations that are all replications, minor replications of of the larger pennant itself. So everything is just repeating in smaller and smaller cycles. And if we break out of it upwards at all, I think that's just buying pressure and hedge funds struggling to keep the price under control. But I wonder what anybody can say, or if anybody can shed some light on this concept of eventually the bull pennant just playing out to its sort of logical algorithmic conclusion. And at that point then, when there's nowhere else for it to go, then it's stratospheric. What are people's thoughts on that? And that's sort of my 2 cents for now. Thanks for hearing me out.
Train tickets. I think the wedge or whatever people are calling it, the triangle. It's that's a really good thing to look at. That it seems to me like what we've been experiencing most of this year has been a volatility burn in the stock. Implied volatilities on options in January and February and even March were like 900%, which is insanely high on call and put options. I think it's still very high, but it's come down into the hundreds. I think at one point it might have been below 100% implied volatility on some options. And I definitely, I think the pennant is a graphical representation of volatility decreasing. And that also speaks to why we're not seeing, God, those 30%, 45% up or down days are not coming as often as a result. So I think that's part of it, is that this is becoming a more stable stock. It's becoming less volatile. And I also think that's, to Conway's point, when the other side of the trade are market makers, Citadel, and dark pools, it's very hard for us to get our funds together to actually move the stock up. It has to come from a like that squeeze, that breakout of that pennant. I think is going to have to come from a combination of fundamental news from the company or an actual announcement of this NFT marketplace or something. But I agree with Conway that if we just keep throwing a few $100 at this thing at a time, that the other side of the trade, Virtue Financial and Citadel, are going to go to the dark pools and screw us over again. At least they haven't shut down the buy button on us again. And if you are a Robinhood client, maybe leave Robinhood because it's terrible.
Yeah, so if you're a subscriber to Unusual Whales, this is not an endorsement. They have a dark pool flow, whatever you call it, but you can see the dark pool flow with Unusual Whales. There's other services that do this too. It's not just Unusual Whales. What you see more often than not is that all the buying pressure seems to get routed off exchange to the dark pools, and that seems relatively unique. You can check other stocks too. Like I checked Tesla last week because of Elon Musk saying that he was going to sell. A lot of the sell pressure went through the dark pools on a Monday. And then on Tuesday, when a lot of people got shaken out of their put options on the Monday, seeing that it didn't drop the 50% that some people were predicting, you know, they're just making money by manipulating the stocks these ways through the dark pools. So,
I mean, when you can trade back and forth every few milliseconds, Conway, it's really
yeah,
easy to churn and crank out billions, and that's what's going on right now. This shit should
yep,
be illegal, or it should be taxed at like 95%. It adds
When
zero.
you're in control of the market like they are, there's not much we can do, really, is there? Like you say, they just do it to whichever way benefits them.
yep,
They want GameStop's buying pressure through the dark pools. That day they wanted Tesla's sell pressure through the dark pools.
yeah,
They just do it for whatever suits them.
I think the
yeah.
most dangerous combination is that I'm sorry, Conway, I'm just going to jump in real quick, but yeah, like the repeal of the uptick rule has just given these dark pool short sellers just free reign to tank a stock whenever they want to, because they are their own counterparties. They're like the two market makers that are sitting in the dark pool can literally churn back and forth, and that counters what we're trying to do. So I
Yeah.
agree, Conway. Like it's been frustrating to watch, but I will say this: there are some computers that are trading in those dark pools that are completely technically driven,
Oh
and
yeah,
a proper
Yeah.
breakout of this pennant formation, or like an inside week break or an inside month break or the inside quarter break, those are going to cause squeezes just because of the technicals. And I think that's the other side of it. But yeah, like we at the end of the day, we do control this stock as shareholders. This is not a heavily institutionally owned stock. And they're betting against us a lot of the time.
we're in control
Yeah.
so much as whether we buy or sell the stock. We don't control the
Yeah.
price,
No.
virtually
I
almost
mean,
at all because of the dark pools.
yeah. I
Yeah.
just mean as
Well,
voters,
I
like
guess I've
as
always understood it that the price is going to fire off based on mass FOMO adoption. Is that still the idea?
I don't really think so. I don't think it's going to be mass FOMO buying hysteria, because I think retail's pretty much tapped out. There's a lot of macroeconomic indicators that you can check to see this, but like the amount of discretionary income that people have is just like at an all-time low pretty much. So this holiday season should be pretty bad. And you can kind of see it in some of the earnings reports recently. I reshared a meme that the parody account of Jerome Powell posted. It was a Squid Game meme where like all these companies were getting just chopped up because of terrible earnings, right? Peloton was the worst one, right? It dropped like 45% in one day. That's a huge drop. But consider this, right? What if GameStop is that lone beacon in this dark sea of red, right? Where they're one of the only ones that are making profit this year, this quarter, this holiday season. Okay, and you can kind of see it if you go on Google and look up GME revenue, right? And you look at their cash flow and you look at their revenue. The bullish thing about that is that in previous years, estimates were always kind of low, and GameStop wasn't even meeting those low expectations. And recently, the opposite happened. Expectations came in low, and GameStop has been beating expectations. If that continues, that is bullish on its face. On top of that, traditionally, GameStop is always a very seasonal stock, right? It always pumps up in Q3, Q4 for revenue. And you can see this reflected in the stock price as well. And guess where we're at now? Q3 earnings are just around the corner, and we're currently in Q4, and that'll be reported early next year.
Well, I think even Ryan
burning my
Cohen
lunch.
himself said, I can't remember how long ago it was, but he said himself that GameStop could have been profitable years ago under the right direction, and guidance. So yeah, when you say that GameStop could be the lone one, I've sort of had that feeling myself when I've looked at these sort of revenue streams and whatnot. So it might bring a few more buyers in.
And honestly, I just go back to the industry that GameStop is in. The video game industry is growing, and it has some headwinds because of chips, but it has some tailwinds. If you look at Nintendo's most recent report on the software side, software is selling like crazy right now, and people still want to buy physical games, especially to Conway's point. If you don't have as much discretionary income, you're more likely to buy a physical copy of a game. And GameStop has had a pretty good track record lately of delivering physical copies on launch day. And I think that focus on logistics at that company should not be undervalued. I think it goes back to Ryan's core competency at Chewy. But I really do think that they've made huge headways on that front too. And that could help them this holiday. It's also worth noting the massive waiting list for Coinbase NFT addresses. I think that whole marketplace is going to fire off, and if people mix that with their new GameStop purchases for Christmas, and they start the new year with access to an amazing marketplace for games and NFTs, could be a serious push. Yep. Anyway, I'll step off now. Thank you.
Yeah, well, I think I was going to mention something about, was it Train mentioned something about the wedge?
Yeah.
And we've all seen, I think I've seen every iteration of a wedge for GameStop's chart known to man, if I'm honest. I've always thought that, the one thing it's got going for it is the higher lows every time, which is good. I've always just thought, though, that, they've done it before in the past. These funds that control the market and whatnot. I feel like they'll try to, like, I don't know, push it to the downside to on purpose. Does that make sense? Because obviously it's a bullish wedge and we want it to break out to the top. But at the end of the day, we don't really control the price, do they? Because they just do what they want with it. I've always thought that they might try to push it down to the lower side, but the higher lows, that we've had for the past few months, that's been a big indicator to me that I think we will break out to the upside. It's just a case of when. isn't it? Really, whether or not we get some news from this marketplace, or we get a good earnings report this quarter, or maybe even next quarter. But it does look like it should break to the top.
Yeah,
Well, the
it's
pattern
a
is
stock
just.
that
Oh,
it's a
my bad.
stock that no, sorry, it's a stock that needs news. Like, you need a catalyst for that to happen, CokeRat. And I think that's what we're waiting for right now, is just either NFT news or their earnings report, which I believe is in early December. I think that's like December 8th or something. Like, that's what we're waiting for. We're waiting for actual news catalyst. Other thing going on, because we are in the middle of a short squeeze too. If, like, for instance, someone is long Tesla and short GameStop, well, they certainly have less collateral than they did a week ago. And I think that if a market sell-off continues, that could be bullish for GameStop as well.
I'm gonna sort of disagree, just to continue the conversation. I actually agree with what you're saying, but just for sake of argument, let's say that the short squeeze is over, okay? Because the official data says we're only 10% shorted. I don't believe that. I'm sure none of you believe that either, but let's just say that that's true, okay? Fine. It doesn't matter, okay? Because again, Wall Street's going to want a piece of the action, right? They're not stupid, right? They see the writing on the wall. They see how much volume is flowing through NFTs. They know that gaming NFTs is probably 100 times bigger than that, okay? Because the analysts tell them that. Okay? If you've played online video games, League of Legends, Counter-Strike, whatever, you know how much money people spend just to look cool inside of a video game, okay? And then consider a secondary market for that. Consider that the NFT marketplace is going to disrupt Visa, MasterCard, the Apple Play Store or the Apple App Store, whatever it's called. This is money that could go to GameStop instead.
I think we've all spent money. I speak for myself, maybe. I think we've all spent a bit of money on insider games. When you got to think the skins with inside games, the NFT marketplace will just make them that little bit more unique. And if GameStop can get a piece of that price, then yeah.
I honestly don't think you're not gonna see in-app purchases with NFTs. Not this year.
Probably not.
I've talked to a lot of game developers. It's like they hate NFTs. And I'm not saying I'm not
gas fees. That's what they hate.
Yes, but like I can tell you there is a concerted pushback from game developers about putting NFTs in games. What I think is going to be the happy medium is collectibles based on video game IP. So it's going to be like I said, I think the Pokemon Company is the white whale of NFTs, because people in that scene are already collectors, and now you give insanely wealthy crypto people the opportunity to buy, I don't know, like anything. Like a Pikachu with a hat is going to go for $10 billion, So like that's that, like I said, it's like a Six Sigma, very like out there sort of prediction, but I do think that that's where this is headed. Just from a game development standpoint, incorporating NFTs as in-app purchases for skins and stuff, I think that's a long ways out.
It's probably a long way up, but the point is that we're building brick by brick, right? That tweet that Ryan Cohen put out. We're building the tools, we're building the foundation upon which better things can be built. And that's what's important right now. Okay, and again, GameStop's partnered with the only organization that I've seen that legitimately has a layer 2 ZK rollup solution to all the high gas fees that you see on Ethereum. Okay, also consider that games based on NFTs already exist. There's Gods Unchained, which is like a multi-billion-dollar revenue company, and it's just a card company like Magic the Gathering or Hearthstone or something like that, right? This is a model that has already proven itself to work. There's Zed Run, which is a horse racing, an online horse racing game where you raise NFT horses. They have unique traits, coded into the NFT, into the smart contract, and you can breed these horses with other NFT horses, and their offspring can have traits based on their parents. This is Pokemon. Okay? Pokemon trainers, Pokemon breeders, okay, this has money written all over it, especially if you breed some super powerful or super rare Pokemon or whatever. Okay, there is a marketplace for that. People buy, people pay hundreds of thousands of dollars for rare Pokemon cards. Like you can't say that there's no money in this. There's absolutely money in this.
Oh, definitely. I think there's huge opportunity here, and I think that the way GameStop's going to implement it, they're not going to take a whole lot of risk. They're going to set up a marketplace and put the R&D expense into doing that, but then it becomes about just landing exclusives, which honestly they've done a good job of in the video game space in general. Even if they're not necessarily exclusives, you're talking about Power Up Rewards Pro. Uh, I saw so many GameStop customers who were able to lock down that Master Chief Xbox Series X, that's coming out, and it's stuff like that applied to the NFT space that I think could really make GameStop like a destination for a while. And I don't know, I think that a lot of people uh, want to be the next DFV, and they think that they're going to get rich overnight. DFV's position took years, like almost 2 years to get to this point. And I think that we see that. I'm not going to list individual companies here, but there are other companies with lower per share prices or coins with lower nominal prices than GameStop shares that people like, banana to banana, they think it's cheaper. Um, and I think that that's an issue here, is that like the share price is off-putting to some people who don't understand how finance works at all.
I just want to go back to that point that I think Conway said. Like, let's just say that hypothetically, the squeeze has, it's done. I think even at these levels, we're at the beginning of GameStop's rebrand, aren't we? Really, or rebirth. And they've got a lot of things going for them, which would make me want to stay in the stock regardless of whether or not the squeeze wasn't done or what. I'd stay in GameStop even if it was done. The vision that Ryan has is enough for me to want to stay in.
I feel the same way. Like I really appreciate the management team and how they've handled the squeeze. The fact that they raised money, paid off debt, and have invested for growth. All things being equal, like I want to own this company because the video game space is growing, and this company. This is like when Netflix shifted from mailing us DVDs to streaming. It took years, and then they went, "Oh, well, let's create our own content too." And that was even 5 more years later. So this is probably a 10-year story now. And for people who are in it for fast money, it's going to be frustrating. You're going to pull your hair out if you watch this on a 15-minute chart. Like it's going to be frustrating. But if you look at the company, you look at the addressable market, you look at where their share is in this space, their footprint, it's actually really compelling investment. And I think when it gets into those, I think it was in the low 170s a few weeks ago or whatever, it gets kind of interesting. I think that's why the stock's still here.
They like to run it up quite quick, don't they? They like to do these big runs over like 2 or 3 days, but then they will absolutely hammer it for about 3 weeks, 4 weeks, don't they? Before even anything, like another run up. You see it all the time.
Yeah. I have a theory that they do that on purpose. It's not that they're getting short squeezed necessarily. It's that they need the volatility to spike up so they can sell you overpriced options.
Yeah, they get you feeling all euphoric and whatnot. And oh my god, it's gone up 40, it's gone up 50% today or whatnot, and then they'll just absolutely hammer it for like
Conway, that's like the synthetic short that's out there right now is in the call options market for GameStop. Like it's
I mean, you still see unusual options activity for sure. Technically, it should be illegal because of the new regulations that came out by the DTCC. But like, I have so little faith in the DTCC. I have so little, faith in how the system works that you can't really, you know what I mean? Like we could theorize, we could talk about it and say, oh, but it should be this or that, whatever. The problem is that we don't really know what's actually going on because we're not insiders, right? They could be breaking the rules. It could be ignored, whatever. Like we just don't know. So just focus on the things that we can control, right? And that is the company. People legit, like I went to the store the other day and 3 or 4 people walked in. None of them were Power Up Rewards members, and I legitimately tried convincing them that they should sign up. I was just a customer, not an employee. I was suspiciously decked out head to toe in all GameStop, clothing because represent. I'm a huge nerd that way, but these are the things that you can control, right? If you get people to consider that, hey, maybe Scamazon isn't really doing such a great job giving me the things that I want or need, and I'm gonna actually make money, right? I'm gonna be shopping anyway, and if I can sign up for a Power Up Rewards member and make some of that money back, right? Get it back because the membership is legitimately better, right? Then that helps, and it's getting people off of that Amazon addiction, especially for consumer electronics, collectibles, video games, all the things that GameStop's known for. And considering GameStop instead, that is where the real change is going to come from. Okay, and this earnings is going to be interesting too. I'm going to plug myself a little bit. People ask me to make a YouTube channel. I just made 2 YouTube videos about very basic charting, very basic technical analysis. Okay, I just tweeted it out. So if you don't know, about moving averages and volume and profile and all the things that I tend to tweet about, and the things that Howie, shout out to Howie in the audience over here, likes to talk about, those 2 YouTube videos that I just posted will help you explain, but it'll also help you identify dips when you're looking to buy dips. It'll help you identify tops for when you can see when the price is coming back down. And the point is that I'm trying to make is that it looks like the stock price is turning around. And it's weird right now because a lot of people are talking about selling covered calls, which I think is dangerous, and buying puts, which I think is also a gamble, because from a technical perspective on the charts, on the weekly chart, if you look, it's looking like we're going to have a bullish MACD crossover. And all that really means is that on a weekly chart, the average price looks like it's trending up, and it's going to be trending up harder and faster in the coming weeks. And it makes sense because of Black Friday, because of Christmas, Hanukkah, Kwanzaa, whatever holiday you celebrate at the end of the year, right? It's looking like that price is trending up, but also because of seasonality. Q3 revenue always goes up. Q4 revenue always goes up for GameStop, and the stock price usually is reflected in that. And so I'm very optimistic about the coming weeks. So if you've been frustrated with the stock, okay, consider that, you may not be an investor. You might be a trader. There's nothing wrong with that. Okay, there's nothing wrong with that. But just like consider your actions carefully, because there's a lot of forces working against anybody that's short. Okay, if you're buying puts, we know from Jim Cramer in 2007, he made a video telling all of his short seller friends, if you're going to short a company, don't short the common stock, buy puts. You have to buy puts if you're going to short a company. That's what he says. And that's because there's downside protection, right? You can only lose whatever money is in the put. You can't lose an unlimited amount of money. So just be careful. If you're selling covered calls and the stock goes up, you could be assigned, and you will not only have to lose money because you sold those calls, but you're going to have to hand those shares over. So be careful when you're messing with options. That's all I'm saying. Okay, do your own research. This is not investment advice. Just be careful.
Cool.
Hey, Josh, did you want to jump in there? I saw that you had your hand up, and I wanted to make sure that you had a moment to speak.
Yeah. Well said, Conway. No, mine was pretty basic. I know I have a lot of AMC people kind of follow me in here, so it's kind of just a basic question just to kind of get everybody on the same page. Let me pull it up in the DMs really quick. So is GME doing anything similar to PlayStation Store or Steam for the digital content? Or is that what the NFT marketplace is essentially being used for that you guys are talking about? That's just a basic question I have. Anybody wants to answer that? I know, Conway, you're pretty well spoken with that stuff. I know a couple of people wanted to talk as well regarding Loopring, but just wanted to have like an open floor for you guys to talk about it.
So GameStop used to have this platform called Congregate. It was an online gaming thing. They bought it in 2010 and they sold it in 2017.
I love that site. As a kid, it was epic.
Yeah, it was actually really fun. It was some of it was ad-based games, but you could play on your browser for free, kind of thing. And they had some games there. That was probably the closest they ever got to being a digital storefront, Josh. It seems like they've moved away from that, and that space is super crowded and messy. I can't remember who mentioned it, but we have that Epic versus Apple lawsuit that's still being appealed and going on. But there was a break in that case last week. The judge denied Apple's appeal about having to allow third party, just the mention of a third party payment solution in the app. They have to implement that by December 8th. And they were trying to get that delayed into next year. So that's a huge win for every mobile developer out there. But no, there's not like a proper Steam competitor that's out there from GameStop. They do sell digital codes though, so I don't know. It's a good question, Josh. And I guess it would be an opportunity down the road, but I think that space is super messy right now. It's like almost every game company has their own launcher. You know, like that GTA travesty that came out this week is on the Rockstar launcher. Epic Games has theirs. Ubisoft has Connect. I believe there's Origin for EA. So it seems almost like we're moving away from that centralized storefront digitally. In the gaming space. So that's probably why they exited Congregate, and kind of, they were in way worse shape in 2017 when they sold that too than they are now.
How did they not call that Congregame?
I guess it was called Congregate when they acquired it. They wanted to keep the brand, so.
Right. Missed opportunity.
I could really feel, just a couple of months ago when the news that Steam was like basically shunning anything to do with blockchain or NFTs or anything. They basically said like, we're not touching it. You can't do anything on here. If you're doing any of that, you're off. I could just feel those GameStop developers just like salivating over that, just through Twitter. I feel like they were just so ready to jump in there and like embrace it because there's so much opportunity for it.
Yeah, like I said, man, this is that's kind of speaking to what I was talking about. Just from me working, games media, my colleagues and also developers I cover, there is a hatred for NFTs that is deep in the video game industry right now. So a company like GameStop to take a risk in this space, huge opportunities await them, and also a lot of goodwill from the crypto community when that does happen.
So my question for you then is, I guess I don't understand why they would hate it. I guess the incentives just aren't properly aligned, because I think what GameStop is doing, and you can see it with the nft.gamestop.com domain, is that they're really putting emphasis on power to the creators and power to the players, how they're going to create an incentive for the developers and the creators to also benefit off the technology. So is that formally not done very well? Is that why they don't like it?
Probably a little bit of that. I also think there's just some very uninformed people in the industry. There's a narrative that NFTs are bad for the environment, and it seems like Ethereum especially has made a lot of efforts to make at least mining of the currency and whatever minting of these NFTs less of a detriment to that. I think there's like just some uninformed people who are in high positions in the video game industry, and they tend to be slow to adopt things. Like you look at free to play, right? That was huge on mobile, and it took the video game and like the big stodgy video game companies like 10 years to really implement that. Now we have a free to play Call of Duty game. Fortnite's free to play, Rocket League's free to play. Like some of the most successful games are now free to play. I feel like right now in the games industry, this pushback on NFTs is going to look like that in the future. And there's even like, I don't know if you've seen Mila Kunis. She has several shows that she funded via NFT. So I think that this is so new, and the video game industry is so safe. The larger companies, I should say, indies are going to take risks, but these large like Activision, Blizzard, EA, all those they're very careful when they make moves like this. So I think there's some reticence there, and then I think from the decision makers, they're just old and they're afraid. And like if you're Valve, you already make billions. You barely do anything. You know, you're just a store at this point, and you get to collect your 30 or 15%. So they don't want to rock the boat because they know that they could have a boycott on their hands. I don't know if you guys saw last week, Discord had to walk back some comments they made about NFTs because they had a revolt on their hand. A lot of people were saying they were going to leave Discord. A lot of game developers came out and said they would too. So yeah, I think there's some misinformation going on that's been spread pretty wide across the video game industry that leads to these decisions. But yeah, it's a long-winded answer, but it's a complicated question.
Going off of the misinformation aspect of that, I think something that would be really helpful if GameStop would do, since they're really, I mean, it seems like they're positioning themselves as a springboard for all of these different developers and gamers alike to really jump into this brand new space. I think it would benefit them greatly to do something like pull one page out of Coinbase's book where they actually like incentivize people to take these classes in like a little bona fide academy kind of thing where people can go through and actually learn about the things in depth. I've never done it myself, so I can't speak on like how good it is, but I think if there's something like that on the GameStop NFT page where people can learn about it and earn a couple of coins for it, I think that would be really, really helpful.
So I agree in principle, but I think I disagree on the model. What we've seen from Robinhood and any of the brokerage apps that give away things for free, it seems like that's a mechanism used to drive down the price, and it's probably being used as a tax write-off, as a business expense. So if you want Loopring coin to go up, you don't want that. If you want, whatever stock, I mean, keep in mind, Robinhood was handing out free shares of GameStop back when it was $4. Okay, people who had them are kicking themselves now because they could have sold at $200 to $400 or whatever it was, right? so
Or
I
10
disagree
million.
that they should. Right. So alternatively, what is possible, what we've seen from Uniswap, is that anybody who held the Uniswap governance token, and LRC is the Loopring governance token, if you become a liquidity provider on the platform, then you could be putting yourself into a position to receive airdrops in the future for being a liquidity provider, right? So on Uniswap, anybody who was currently providing liquidity, but also historically providing liquidity, got airdropped Uniswap tokens, Uniswap governance tokens, right? And for people who had multiple, say, MetaMask wallets who were providing liquidity on Uniswap for different pairs, all those wallets, even if it was the same person owning them, they all got airdrops. Okay, so I don't know if this is going to happen. I'm just saying historically that this has happened with other exchanges, and this could happen with Loopring. Also, if you have the Loopring app, if you have the Loopring wallet already, they have this red packet thing, right? It's a Chinese red envelope type of thing, Asian New Year, gift, and they give little giveaways there all the time. I think today they had one for 4.2 Loopring coin and another one for maybe 5 or something like that. Shout outs to Cyberduck if he's in the audience for pointing that out. And for that, you just have to check your app. Check your app, go over to the part where it says, red packet, click on that, and check that for yourself. But they do seem to be limited time offers. So if you wanted to earn free Loopring coin, that could be one way of doing it. But
I guess my point was more generally just like it'd be cool if there's some way to really bring people in to learn and have some incentive there. Like even if it's not like free coins or whatever, like I haven't really thought that far into it, but yeah.
That's potentially something that we could do because Loopring.org, they also do, there's a program where if you want to educate people to learn about Loopring, you can apply for this grant that they have, and they will pay you in Loopring coin, I think, for doing that. I know it exists. I haven't applied for it. I may consider applying for it, but it exists, okay? And so that's something that you could do that would mutually benefit the entire community, rather than having, Coinbase, which I personally don't trust that much anymore, handing out Loopring coin and making me wonder if they're not doing that to try to suppress the price of Loopring coin. So there are options, but we'll see.
Yeah, that Coinbase Loopring freebie came out of nowhere.
Yeah, and you only get.
It didn't come out of nowhere. It came out mid pump to try and pull as many into it as possible.
You only get like $1.50 out of it. Like that's nothing.
Exactly. Yeah.
That's nothing. Like how much tax savings are they getting by writing it off that way? I don't know. Right? How much are they able to suppress the price that way? I don't know that either. Right?
Isn't Coinbase more focused on how many users they have, though? Isn't that like a metric that Wall Street seems to care about, like activity on their platform?
Yeah, I don't really know how they value Coinbase, but we know that Coinbase seems to be
poorly, clearly.
Right. We know that they seem to be working with Point72, Steve Cohen. He's one of the hedge funds that bailed out Melvin Capital back in January when Robinhood was, shutting down the buy button on GameStop. So that relationship, I think, needs some examination, but also just the high fees, the exchanges shutting down at the most inconvenient times. And this is not unique to Coinbase. Like, all the major exchanges have been doing this. It's bad. It doesn't look good. And personally, I think I know why. And this is where I'm going to stress caution for everybody looking to buy into cryptocurrency right now. That if you look at the macroeconomic picture, right, you zoom all the way out and you look at the whole planet, okay? There's a global dollar shortage going on right now. And you can see this in China where Kaisa, Evergrande, Country Garden, whatever, ex-WWP can probably correct me in the audience. They have dollar-denominated debt, and they have a really hard time getting dollars right now because of everything going on in the world. So how are they making these payments? I don't know. Maybe it's through crypto. Okay, and I want to be careful in saying that because it could be misconstrued as an accusation of crime. But there is a lot of weird overlap going on here where a payment may be due and then crypto crashes right before it. I've seen it happen time and time and time again. Correlation is not causation, but it is something worth considering. And SEC, please investigate. That's all I'm saying.
Conway, are you describing a liquidity problem more than a currency shortage per se?
Well, it's both, right? I mean, if you have dollar-denominated debt and you need to pay it back in dollars because that's the structure of the debt,
yeah,
and you can't get them, I mean, what's the difference? It is both a liquidity issue and a global dollar shortage.
And that speaks to, I mean, we've seen this in the past when there's a deleveraging cycle, so it's not that uncommon. Right. What you're saying is just interesting in the face of inflation. You know what I mean? Because usually we would be witnessing deflation if this was the case, because demand for dollars is spiking. Right. I guess there's a push-pull going on here with Federal Reserve monetary policy still classified as easing right now until the middle of next year, versus China, where a lot of these entities probably invested in crypto with dollars that they had years ago. It's why I don't own much crypto. I only own Doge. I do it for the meme, and I have a dog. But yeah, I honestly, that's it. Like, I put an insignificant amount of my net worth in it, and I'm never going to sell it. But I don't like the liquidity issues inside of crypto markets in general. And I think I think what's going on in China kind of highlights that. And like you said, correlation is not causation, but it's undeniable what you're talking about there. We've seen it several times, and we know that a year ago, China was all in on crypto. So it's not that big of a stretch, I don't think. I think it's an interesting way to describe it as a dollar shortage as opposed to a liquidity issue, but they're the same thing essentially.
All right, so I'm gonna go on another kind of a long rant, but the concept of
sorry, can I just
sorry, Conway, before you begin your long rant, we can't wait to hear it. But just real quick, I know that the BullHouse has to stop streaming, so just to give you guys all a heads up that they're going to stop recording now. And then also, if for the audience members, if you're listening, feel free to begin requesting to speak if you have any questions. We'll go ahead and start taking those questions, and then probably in about, I don't know, CokeRat, maybe 15, 20
I've got
minutes?
to get off in about 15 minutes to go see family. So if